Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 23rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my comments on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data that came out today was consumer confidence came in at 92 versus 97, so that slumped quite a bit. We did get existing home sales better than expected at 5.47 million versus 5.37 million, and the Richmond Fed Manufacturing Index came in at -4 versus -2, and that kind of put a slump on the overall equity markets. The equity markets are also following crude oil /CL is the chart here, and the reason why we are seeing crude oil down a little bit today is OPEC came out and said, hey, we're not going to stop production right now on oil because Iran is cheating. Well, Iran's cheating because they don't have anybody beholden to, and so therefore they're like, hey, I'm playing catch up. We've been banned from selling oil on the open market. We're going to produce as much as we can and make as much money as we can right now. Therefore, that has thumb screws on OPEC because OPEC doesn't want to shut down production if they're going to just watch Iran make up that difference. I talked about this yesterday in the Timing Research show. They're just not going to shut it off. They're kind of stuck in a corner right now with Iran pushing it out. So the line in the sand for oil, if it gets above 35, then it's going to look pretty bullish, maybe up to about 40. But until then, I'm not going to step in the water here and short this market just because there's too much risk to the upside if there is any kind of agreement going on over there that comes out and says they are going to shut down production. We could really see a massive spike in there. But to the downside, there's just not a whole lot of downside in my eyes for this because of the cost of carrying or holding this oil in tankers and the cost of changing that over from the crude form to petroleum. There's just a lot of cost there, so there's not a lot of margin going on. So I just don't see it going much lower. It's just too much risk to the upside to short this market at this point. Moving forward, that crude oil moving lower is also causing the NASDAQ /NQ and with the economic data going south on us, the overall NASDAQ is coming off of its lows, but down still about 31 points, and as well as the E-mini S&Ps /ES coming off of their lows from this morning. We basically opened up and just free fell right off the open. If you can look at the E-mini S&Ps right here, this is a 15-minute chart of the E-mini S&Ps down about 11 points, but you can see we are off of our lows and right at that value area. This is the point of control. This morning we fell off, consolidated right at that point of control, and then slowly sold off and found a bit of a bottom right here. Came up and are testing this, or getting a little bit of comfort at this value area. On to trades that I've done. Goldman Sachs, if the overall economy is not doing very well, interest rates aren't going to be on the rise. I just decided I wanted to be out of this Goldman Sachs long. Remember, I got into this because if the Fed started raising interest rates, the banks were going to be able to make a little bit more money off of those interest rates and deposits. But if we're not going to be raising rates and the Fed is actually starting to look at lowering rates and possibly going negative, that's really going to hurt companies like Goldman Sachs and the banking sector. So I decided to get out of this. It was profitable, but not as profitable as I was a few days ago. I had on the March 140, 135 put spread and originally sold it for $1.45, covered that for $1.22. So not a whole lot of profit in that and gave up quite a bit of profit into today. I tried to start covering that at about $1, ended up $1.08 I think it was this morning, and ended up covering it right there at 122. So I chased that a little ways. I am still short JP Morgan, which was, if you remember, my little hedge trade, that my pairs trade on this. I was long Goldman Sachs, got a bit of a rally in that, decided to sell some JP Morgan against that, and I still have that on. So, and on to Mandela's. Mandela's is a powerhouse in the cookie sector or the snack sector. Vending machines have it. It's basically Nutter Butter, Oreos, and things of that nature. They also were the ones that came out with Tang, which was the original Gatorade, if you will. It was the drink that was sent up into orbit with some of the astronauts. Tang was a big deal back in the day. Some of you traders out there may not even know what Tang is, but it was one of the original kind of like Gatorade powered drinks for the astronauts, and then came out onto the market for the retail sector shortly thereafter. On to gold. Gold, I'm a little bit bullish on this. If the overall economy is not doing very well, then gold is going to be a flight to safety, if you will, to the away from some of the currencies that are going to get beat up in that. So I've got a little bit bullish on this, and there's a bit of a gap here, which I'm just below on that. And so I decided to go into the April 112 109 put spread and collected 72 cents for that. Now you could probably get the 112 111 for about a third the width of the strikes on that, and I decided to get a little bit wider because I'm a little bit more bullish and take on a little bit more risk there. So that's why I widened it out just a little bit. But now that it's come off a little bit, it could be a little bit even better now. On to some earnings trades that I'm looking at. I'm looking at Target. Target is in a downward spiral. They coming out with earnings this afternoon. This looks like it is going to be a major resistance area. So I'm probably going to be, with the high implied volatility, able to get up here in the 75, 76 area, which is probably what I'm going to be looking at for the short end of this. I don't think I'm going to get long it just because some of the other retailers that have come out with even better than expected earnings, like Home Depot came out today and really slumped even off of the better than expected earnings. So going forward for Home Depot, this 127 area is going to be a major resistance. As you can see, we have tweezer tops here. So I might even look at throwing a trade on in there for a short, rather than going into lows, which is really already seeing this massive sell-off because they are so closely correlated to Home Depot. People are stepping in front of their earnings that come out tomorrow morning also. So I may stay away from this trade and just play the Target one. I'm just going to have to wait until towards the end of the day to see how everything lines up. That's usually when I put on those earnings trades, is at the very end of the day. Going forward, Friday's webinar is going to be on iron butterflies, so stay tuned for that. We're basically doing a 3-part series on this. We did iron condors last week. We're doing iron butterflies this week, and then we're going to tie it all together next Friday with how to defend these types of strategies. Yesterday I put on about 5 iron condors, and on Friday I put on another one in Adobe. So one of those, the probabilities, 1 or 1.5 of those should test my limits on my calls or my puts. So we're going to be talking about how to defend those strategies when that happens, when those strategies go bad. So stay tuned for that one. That should be a really great one. That's, something every trader needs to know, because not every trade is a winner. And as a matter of fact, most of your trades are going to be tested. You have 2 times the probability of being tested than being in the money. So this is going to be a webinar on how to react to those kind of adverse situations. All right, that's all I got for you guys today, other than if you can't take that, take it easy.